Hello traders, I want to buy the Dow Jones at 25643. That's a limit order right there to buy the Dow Jones at 25643. That order will be filled if and only if the price rises into that level. All right, so far it's going down. I'm using the Elliott wave principle. All right, price going down, and this is a speculative Elliott wave count on the 1 minute time frame. Here, first wave, the second wave is a triangle, the third wave right there, the fourth wave is also a kind of a messy triangle, followed by the fifth wave on the 1 minute time frame. It's a speculative Elliott wave count. And we have this bounce off. That bounce out that you see there, that's the A minor wave of the flat correction. And this is the B minor wave of the flat correction. You see that the B minor wave, all right, went below this the high of the fifth wave, which is good, all right. Okay, so we are expecting the C minor wave of the flat correction. So price was going up before, we thought that it's going to go up, it's come back down. So because you can see here, that's the B minor wave of the flat correction. So we were thinking that it's going to go up more, but here it is coming back down. One of the reasons why, because I'm on the 1 minute time frame, you have to understand that the higher time frame commands the lower time frame. So because the monthly candlestick bar is not yet closed, if the monthly candlestick bar is bearish and one is buying, is a contra trend, is risky. On the other hand, if the monthly candlestick bar is bullish, but one is selling on the lower time frame, is also a contra trend, is also risky. All right. So here it is, monthly candlestick bar is bearish, and we want to buy is a contra trend. All right. Also, if you look at the time of the day, it's now 48 minutes past 5. We are now in the gap period. The best time for day trading and scalping is normally the first 2 hours when London or New York is open. All right. But as you can see, we passed the best time already. We are now in what we call the gap period. Well, it's a bit risky again and speculative to trade after the first 2 hours when London or New York is open. I'm aware of it, but I want to play with it and see what will happen, okay? Let's go back to the 1 minute time frame. It's going down, so that order is not yet filled. The price is not turning around as we would expect it. It's going down, and the attraction that you are seeing there is because somebody is selling on the monthly chart. You just sell. They are not taking profit, they are just selling. Okay, should we pause the video now? All right, so I think we should pause the video so we can come back to it. I'm on a 1 minute time frame, remember that I'm on a 1 minute time frame. So I'm going to leave a turquoise vertical line there. At the point where you're going to pause it to avoid that the video is too long. Do you like a long form video or short form video? A lot of traders will say, I like the short form video, but some videos should be long. And this is one of those, okay? So there's this low here on a 1 minute time frame. So far, we'll call that as a psychological price level on the 1 minute time frame. It's a critical price on the 1 minute time frame. So it's just a noise, market noise. So what I'm thinking to do is this. The price goes back above this low. I will buy it here. So I want to leave another limit order there and see whether the price will come there to fill it. Okay. Nice one. Okay, let's pause the video and we'll be back shortly if there is something interesting happening here. I'm going to move the vertical line to this candlestick bar. At the point when we are pausing the video, you see the time? Can you see the time there? Can you see the time written there? 12:51. Show you here. 12:51 in London on the 14th of August 2019. All right. That's it. Waiting for 2 limit orders to be filled, not yet in the trade. Okay. So I'll pause the video with your permission. I will be back shortly if there's something interesting. I will stand around here. Will you fill it now so you can all see it when it's filling the orders? So as soon as those orders are filled, I will use a 30 pip stop loss. So I'm using 30 pip stop loss. Okay. 30. Is it going to fill it now? Will you bet on it? You shouldn't be betting, okay? Something has been happening today. You can see that anytime the price breaks the common center line, it will go around and it's a new lower low before you retest it. Crazy, huh? Really crazy. Somebody's selling on the monthly chart. Okay, can you see that? I'm waiting for a reversal in this zone, and I will explain it to you later. Apart from my Elliott wave count, do you agree with my wave count or do you disagree? Feel free to disagree. Because the price just turned around. This is a speculative Elliott wave count. So because if yesterday we were talking about this is speculative Elliott wave count, so we are not applying the Elliott wave rules as by the book. Now we understand the theory, but we are using the Elliott wave theory to speculate in the market. Are you getting the message? We are using the Elliott wave theory just to make a trading decision. We are not applying the Elliott wave theory by the book. So this is a mindset. So when an Elliott wave trader decides to use the Elliott wave as a speculative tool, that's what I'm doing here. So yesterday I did say 1, 2, 3, 4, 5, and I see to trader flat correction, expectation to come here. Now it got down. So what am I talking about now? It is a speculative Elliott wave count. So don't go into the theory and say, Joel, blah, 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 because I will not bother to reply to you because it means that you watch only 3 minutes of the video and you jump into a quick conclusion, all right? Okay? It keeps going down, okay? It's just going down. So those orders are not going to be filled just now. So let's pause the video with your permission after 9 minutes recording, and we will be back soon. So moving the vertical line right there. Thank you. Okay, traders, let's continue with our recording. Now the price continues to go down as we were expecting it to turn around here to form the C minor wave of the flat correction. But we have what we call an expanded flat correction. As you can see, the point B is now exactly at 138.2%. Hold on, please. It's now a can you see that? 138.2% Fibonacci extension level of the fifth wave. So if you apply Fibonacci extension to this fifth wave, the price continue to hit exactly 138.2% Fibonacci extension level. My expectation was that it would turn around earlier here because the whole day the market was going down, but they brought it back exactly at 138.2% Fibonacci extension level of the fifth wave. So to summarize so far, we call this one first wave, second wave, third wave, all right, fourth wave, fifth wave, A minor wave of the flat correction, and a B minor wave of the expanded flat correction. So therefore, with those changes now in place, I will put my limit orders in different places. All right, limit orders to buy Dow Jones Index. So I'll move this one here at 25585. Bring this one a little bit closer here, above the high here at 25573, and that's it. I will leave two limit orders there. Those orders are not yet filled. They will be filled, okay, if the price turns around. If it doesn't, then we are not in it. All right? If it doesn't turn around, those orders will not be filled. All right? So though it looks like it touched it here, I just placed that limit order there. You see, okay? All right. We need to move that vertical line here. So our expectation now, talking about a flat correction, is this expectation and the reality of the market. So price has a high chance now to form the C minor wave of the flat correction. Will it do that? It may not. Right? But if he's doing exactly that, well, we have an edge. Okay? So the problem that we face is that the most important thing for a market participant is to have a bit of idea where the price is headed. It's always headed to the target level, or the price is forming a pattern. Now, so far, with the information that we have on this 1 minute, now I'm back on the 3-minute time frame, that we have now on the 3-minute time frame, you have to understand that originally we were counting a wave on the 1 minute time frame. So it's the same here. First wave, second wave, third wave, fourth wave, fifth wave. Okay, A minor wave, B minor wave, expectation of the C minor wave. Normally, in theory, should be subdivided into 5. Now I'm moving away from the 1 minute time frame. I'm going to the 3-minute time frame. Here it is same thing here. So you can see that this order is now filled 25573. For that trade, I will use 30 pips, right? 30 pips. So that stop loss will be at 255. Okay. 43. That's it. I need to remind trader that this video is for educational purposes only. It's neither solicitation nor offer to buy the Dow Jones. It's primarily for the TST. So this order also is now filled. This second order here at 25585 is also filled, and I will place again, use again. All right, 30 pips. Stop loss will be at 55. Are you with me? Are you following me? All right, good. All right. And then we're going to discuss all this blah, blah, blah. Okay. All right. That's the second stop loss right there. We're going to, okay, color it also into red. Now, I need to keep loading it. All right. Okay. This is a speculative area we count. Why is this speculative area we count? Because yesterday I explained it to you before, blah, 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 on the lower time frame. Anytime you apply the area way rules on the lower time frame, to a certain degree, it's a speculative area way count. If you want to know more about speculative area way trading, go to www.24elliottwaves in plural.com. 24elliottwaves.com. All right? Waves X alpha. All right? So that's it. So I'm in two trades, nicely filled, and first stop loss at 25543, second stop loss 255, 2555, there's a 45 there. Can you see that? 25555. Good. So far, it's working beautifully. So what am I playing with here? That's good. I'm playing with the last leg of a specific pattern. What we have noticed that very often during the last leg of an area way pattern, the price can run fast. The momentum may increase. So when I'm speaking at this, some trader will think or will register in their mind that the price always run fast in the last section of a pattern. No, not always. I want you to remember that. Just remember, not always. It has a high chance to speed up. This is what usually takes place. It may not do that today, okay? So that's what I'm playing with, okay? So when we are using the area wave principle on a lower time frame, we want to speculate a bit, all right? So we are using the area wave principle to make scalping day trading decisions on a lower time frame. Now, when we are talking about speculative area wave count, we are not talking, in fact, about waves or impulse wave in the proper sense of those words, but we are talking more about price move. Price move 1, 2, 3, 4, 5. We don't care about area wave violation. In that case, it did move 1, 2, 3, 4, 5. Well, now we are watching it. It's all your playing. That's what we did yesterday, okay? 1, 2, 3, 4, 5. We were talking about flat correction. I come down again. We are talking about 1, 2, 3, 4, 5. Pure speculative area wave count. All right? Now, it doesn't mean that I do not know about the area wave rule. I know about the area wave rule. But I'm using the area wave rule to help me make scalping trading decision. That's what I'm doing here. That's what I'm doing now. So price coming back down again. Is it going to take that one out? That's our second stop loss for this one. That's the stop loss there. Price going round and round. This is what has been going on. Is it there now? It's not there yet. So you see, just bounce out, go back down, bounce out, go back down, go back. Just go turn around. It's not stopping because what today? All right, all right, all right. Okay, that's a losing trade right there. So we had now we have 30 pip loss. We need to note it down. So our second trade is a losing trade. We need to move that line out of the way. This one, gone. And that stop loss is gone. That's it. The most important thing is that you do the right thing, you do what you're supposed to do, okay? Losing trade will happen, and this is one of them there, okay? Current time in London now is 20 minutes past 6 p.m. on the 14th of August 2019. Live day trading with Dow Jones using the Elliott principle. After the price went down from here all the way here, we have noted down 5 waves, and after those 5 waves, we are seeing here the formation of a flat correction. So when a pattern is developing, does not mean that the pattern will definitely be completed. It may fail. So we see the first one we call the section A, section B. We are expecting the last leg, that is C. But still, at this point, the pattern can still fail, meaning that it may not form C or may continue to go down more. So if it happens, look back again and see, okay, what kind of message the price is communicating to us, and from there we make another decision. That's what we are doing. So really form the C manual wave of the flat correction. Right? So you want to pull back a bit. Okay. We will see. Okay. Now I want to, if it's going back up, I'll buy again. Okay. Place another order there at 255.90, limit order to buy. Almost there. Almost there. That's it. Second trade back in. So we had the one losing trade. Don't forget that. Okay. So hopefully that will help some trader to understand what's going on behind the scene. Losing trade do happen. Okay. If you are a trader, just understand it. Okay, now we are in the second trade. We set stop loss 30 pip again. C0255 C0. Somewhere in that zone. The market is funny today because it's just going round, and come back to the starting point. Very, very annoying market today. It's a little bit emotional. That's the way you see it. People are running around with like a headless chickens. Oh, is it going to form that C man away? If you look carefully here, people are playing with the stochastic this is CCR, by the way. Who are selling anytime the CCR reaches the overbought zone, people are just pulling it back down. And here they're just pulling it back down. Here they pull it back down. They pull it back down. That's what they're doing now. It's going up nicely, so we are now, you see, if you look at this trade here, that would the one that took at 25573. That's a beautiful trade, isn't it? It's working nicely. In a market like this, you want to take as much as you can. Okay, that's it. Bear with me, please. 23. I want to take a profit there. That will be 50 pips. Now we have so far 30 pips. Will it reach it to make it 50? We are now 40 pips, all right? 40 pips. That's a nice trade though. Huh? Can you see that? That's it, my friend. Can you see that? Is that gorgeous? 50 pips out of this trade. All right? Okay, that's nice. So this one was very friendly. So we want to manage this one, okay, and look for another trade. So what we need to do, put it on the board. Okay, now where are we now? So some people are taking, you see this resistance here on the. You see how people are respecting even on the 3-minute frame. So this resistance probably rally up to retest that resistance. People are taking profit there. All right. I could have done the same, but so we want to set a target for this one. We would prefer to take another 50 pips somewhere here at this zone here. That would be great. That would be great. Nice. Good. Out of that trade. Out of that trade. That's another 50 pips very fast in a friendly manner. Good. So we are doing very well with this. This is what I'm saying to you. Do you see that the momentum was increasing now? This is what we are talking about. The last leg. Okay. Help me, please. The last leg of a pattern. Quite often, the momentum is very, very good. Have I managed to demonstrate that? I need to say this 100 times, especially for someone that's watching this video and say, oh, it's always like this. Look at that. I left a lot of money on the table now. So what? Doesn't matter, okay? It's what I wanted you to understand. The most important thing that you get paid. I could have moved my stop loss and secured it, but it was a nice move. So you see now, so 100p minus 30, 70p profit wasn't bad. And did you see how he ran fast? Okay, you see how he ran fast. So, okay, they see man away of the flat correction. So it looks like 1, 2, 3. Are we going to have one more like this? Or is that it? Sometimes you may not see distinctively, you may not see the internal way 1, 2, 3, 4, 5. It may just go, pooh. You're thinking that it's going to do that, and then you won't do it. All right, so hopefully they will obey me. They must obey me. No, they don't have to. They don't have to. They do not have to obey me. All right, so. Are we getting somewhere with this trade now? Are you getting it? So some of the trade, as you can see, this one is very friendly. Some of them can be a bit funny, really funny. So I need to tell new traders, so though you don't get carried away and say that it's always like this. Okay. So we're doing very well today in comparison to yesterday, is it? Yesterday we took 3 trade, 2 winning trade. Yeah, yesterday was also good. 3 nice winning trade, trading Dow Jones, and 1 losing trade, 30 pips. I noticed that one trader marked the video down. Usually, if the trader, if is it because of the length of the video or is it because of what we have discussed? So if you want to put any comment, please put in the comment section and do course. Or do you think it's a public show? It's not public show. Because what I've noticed is that the trader want to see losing trade, winning trade, how decisions are made, or maybe the person is a very advanced trader. Say, George, I'm not impressed at all. I didn't like your accent, blah, 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 blah. I mark it down. Okay, but sometime if you mark it down and you think that there's something need to improve, please let us know in the comment section. That's all, okay? So, voilà. I'm still here. I'm still here. I would like to have another pullback, okay? So here it just give us that shadow, and this one's going up. I would prefer this candlestick bar to be bearish, to close bearish before another one. Then that would be good, but we'll see. So I'm out of all this trade now, okay? So I'm looking for another entry point. If you have another pullback here, what's going on here? I don't like it, okay? So we move those red line. We don't need them anymore. So we are now, according to the Elliott theory, that we are using in a speculative fashion. All right, very important, speculative fashion. This is a speculative C-manner wave of a speculative flat correction, expanded flat correction. We are playing with the market noise on the 3-minute time frame. Oh, it's taking so long now. Okay, so that's 32 minutes. What I'm going to do, all right, traders, let's place a vertical line there and pause the video with your permission. And so the video is not too long. All right, that's 32 minutes so far. We want to keep it like 55 minutes, okay? Some traders say it's too long, George. I don't like it. Well, some video will be very, very long. You can bet on that, please. And some video will be very, very short also. So this type of live recording, please do not expect the video to be short, okay? It will be long, okay? It will be long. So you see, Joe, you can edit it and cut it. I don't do editing of this video at all. I just give it to trader as it is because it's a bit of a time consuming. First, you hold your computer down and you spend a lot of time babysitting the chart, recording this live, and then you're going to edit it, blah, blah, blah. Well, maybe. Maybe. So this is good now. So it should stay bearish. Now, I would prefer, in fact, to be nicely bearish, but that kind of thing. But I'm talking about this one that is being formed here. This is something that some of the bullish traders don't understand. Because if you want to buy, you see something like this here, this shadow here is a kind of weakness here. So we want to see a retest. We want to try to come down to see this zone. Yeah? This is healthy, and then it's bearish. So if the next candlestick bar, so what we were expecting, we are expecting this one stay bearish, all right, and the next one is bullish, and then we place a limit order ahead. Sometimes some people they just buy anywhere, anyhow, and then sometimes a setup that is developing they just waste it, or the price can reverse because if they create a bearish pattern here, the bearish trader will respond. Now, not only bullish traders are watching the price action here, bearish traders also are monitoring the candlestick bar here. Now, will he do it? It may not. So, like I said to you, The C manual wave is the last leg of the flat correction, and sometimes you may not see the internal waves because people just push it, and it reaches the target at the end of it. But it's better for talking about a healthy market or efficient market. It's better that the price exhibit the internal wave, which means it goes up, people take a bit of profit instead of being too greedy, all right, and then it pulls back a bit, and then it goes up again. Now, with that, people will make less mistake and likely to have a lesser risk. All right, this is what we are talking about. But the price does not have to obey anybody. But we are talking about efficient price move. Okay, so now this is what we got now. This is this is not very nice. This one is not very nice. Okay, are they going to push it up? But I don't like to join. I don't want to join them like this because of these two currency bar the way they are. If this one was bearish and the other one start going out there, I may place a limit order there. But the way they print it there, I won't join them. Okay, that's me. I won't join them like this. Okay. So we do pay attention to the candlestick bar for the entries, all right? So you may say, George, are you combining the Elliott wave trading with the candlestick pattern? Yes. All right? Should we pause the video or should we wait? They may print another long candlestick bar here, but the entry is not easy, so I don't want to join them. So hopefully that will be the end of this tutorial. If they bring it here, I will wrap it up. So those who want short tutorial can be a little bit happy and say, George, thank you so much. You didn't push it to 1 hour today. So they are happy, okay? So as I'm sitting here, let's go through what is happening, talking about the broader view, the broader, not broader like a sister and brother though, broader view, B-R-O-A-D-E-R, broader view. We go to the 4-hour time frame, as we were talking yesterday. There we are. So on the 4-hour time frame, we were talking about the Fibonacci pattern, yes or no? Okay, we did. And we say that there was a price move, and we call this one X, A, yes or no? Then we say A, B, C, and we say that possibility that we may have a crab pattern or a butterfly pattern or a Fibonacci pattern. And we say that's the point D there. But I did say also that when a pattern is being formed, doesn't mean that the pattern will definitely be completed. The pattern can fail. And that's what we see today. I also mentioned to traders that we see a double bottom here, so this one and this one. So for a double bottom chart pattern, for the price to be truly bullish, you must find a support above the neckline or what I call the nut. Today, it didn't. It got down. So this is what we are saying to traders. The pattern, a double bottom, the nut is very important. The pattern is being formed. Doesn't mean that the pattern will definitely be formed. So today, surprise, Dow Jones, though we were saying that we are expecting a fifth wave price to go out, the price is the king and can do whatever he pleases. So this is it. Reality of the market, price turn around and gap down today. So what are we talking about? So the game has changed a little bit, but please don't forget that pattern that we are talking about before. Sometimes you may see things like this, create a bit of confusion. Few days later, here it is. So what I'll say to you today, if the Dow Jones or the 4-hour time frame goes back above that level, the nut right here that I mentioned, which level were we talking about? Which one did I tell you? Is it 26425? That's the line there. Okay, call it, let's see here, it's here. Okay, let's see that in fact, we can use the closing price instead of going all the way to the top. But if you want the top, it's 264.17. But if you are using the closing price, it's here 263. It's not very clear. 41, 26341, 26341. I'll change this color because it's so bright that make it a dark green. Then I can see. That's it. 26341. Now I can see it. Okay. That's the knot there. So if one day, remember, if it goes above that level, or the red one day find a support, break it bow, retest for the support. Don't forget about the Fibonacci pattern that we were discussing before, because sometimes the price will do other things, and then people say, "What was he talking about? That guy is so useless. It's not good for me." And then later on, the price will do exactly what we were discussing before. So you may want to print this and leave it somewhere and note it down, and don't forget those levels. But right now, what are we playing with today? Today, it becomes like a consolidation between the knot or the neckline and this low here. The low. Can we move this one? Yeah, we can. Where have I put the short-term equilibrium? So it must be below them. Okay. So here it is. See? The top, if you call the green one the top or the red one the top, and this low here. So price went down from this point, went to the top there, and where are we now? We are again at square one. So it became a consolidation play. So up, down, we are back square, because we were thinking of a breakout. It didn't happen. Now it became a consolidation. When a double bottom chart pattern fell at the 9 and the price come back to the starting point, we become a consolidation play. So we will be saying to traders at this junction, prior to bullish signal above that level 25693, and prior to bearish signal below that. That's why it became today, because of the gap today. So as we are talking about consolidation, there is the midpoint target. So the midpoint target is near the long-term equilibrium price level for the Dow Jones at a 26050. So if one is buying here for the consolidation play, meaning that one received a clear-cut signal here, or one has identified a bullish trading setup here, one will use a different time frame trading method, and one will be prepared to secure gains as the price is approaching the midpoint target. If it breaks above it and finds support, we take it to the top. Nothing. One more time. I need to say this again. All right. We need to say it. We need to say it again. Okay. Better now. It's better now. Is it? Too many lines. Did you say too many lines? Yes, I can draw on my chart, can I? All right. No, this is to make you laugh a bit. Okay. So, are you getting it now? I clean my chart a bit so some trader will be pleased. All right. So, where were we? Okay. So, if nothing can stop the price to break below this low here. Though we are talking, so if he breaks below that low, it's still consolidation play with market geometry. So we'll measure the width of that channel, and then we project it down like this. So we will have, and again, a midpoint target and ultimate target. So for the midpoint target, just measure it from this one to the low, and you project it down. Why do you care about those targets? Because the price does not go up or down for no reason. The market principle is always headed to a specific target level, and there is always a midpoint target and ultimate target. All right? This is it. And all we are doing, we are looking for trading setup on here, those key levels. If there is no trading setup, there is none. You don't have to buy or sell at those levels. You are just watching those levels. So going back to our Elliott wave count. So this is what's happening. One more point I need to mention to swing traders. On the monthly chart, if the monthly chart is bearish and one is buying, it's a contra trend. If the monthly candlestick bar is bullish and one is buying, one is selling on a lower time frame than the monthly chart, is contra trend. It's risky. One must understand that, and one must control it. The months may continue to stay bearish because somebody is selling this month. Here, somebody is selling the whole month. Here, somebody bought it the whole month. So somebody is selling again. Is he going to have a tail? So when you are buying this month of August, is what? A contra trend. Where is he headed on the monthly chart? That's a good question. Have I mentioned it before? Or was it in another video? Here it is. The pitchfork tool, this point, this point, this point in 2010, 2011, again 2011, those are 3 points. You place your pink pitchfork tool as I did here on the monthly chart. Apart from everything else that I say on the 4-hour time frame, talking about target, on the monthly chart, watch out for the lower part of that pink pitchfork tool. Should I make it thicker a bit? I'll leave it like that. Okay. All right. My chart is already there's too much mess here. Are you getting it? But I know, believe it or not, okay. It may look really messy to some traders. You say, can he trade with that? I can't believe that. Yes, I know what is what here, okay? I know what is what. Okay? Are you getting it? Okay. But so those are the. So now that I've come to the, you see, this is what I'm talking about, the midpoint target that we are talking about, market geometry projecting the wider consolidation down. Those are the target that you can see here. Okay. So those are very, very important points for those that are trading the Dow Jones Index. So you see now? So the price I was talking to you, you see what they did here? That's what I was telling you. They push it up now. So I could have bought it myself here if they did make this one bearish a bit. I don't know. They create this dodgy pattern here, and they force it up now. You see, instead of being a little bit nice to everybody and pull back, just pull it back nicely so we can all take it up. The greedy bullish traders create this because they know this is what we are saying. When the pattern is being formed and the last leg or the last segment or the last section of the price being formed, the momentum is very strong. Why? Because everybody realizes now that the pattern, this is the pattern. It becomes clear to them. They see it's not by purpose. They push it to 138.2%. Fibonacci extension level of that fifth wave right there. And now it's here. So everybody see that, oh, it's a expanded flat correction. We are expecting 1, 2, 3, 4, 5. It becomes clear. So everybody jumping on it. The crowd is jumping on it. That's why the last leg or the last segment of a price action or of a pattern is often very racy, like a Formula One last lap. Now, I like racing game, okay, on the computer games, all right. This is it. This is the example here, all right. And there are more to that, and I will be discussing that later on, all right. So you see that candlestick bar that we did about the 3-minute time frame. I will show you what has happened on the hourly time frame. You see. So on the hourly time frame, it's just one long candlestick bar that is developing so far, forming that 1, 2, 3, 4, 5 that we are counting on the 3-minute time frame. So you see, are you getting it now? So you kind of this is it. So I say to you that there is an Elliott principle that no one is talking about, and I will be talking about it. So if just think of it, I'll give you a taste of it. All right? Think of it that you have water pouring from up somewhere to the ground. Okay, so the water normally will be like a curve, isn't it? Huh? Okay, you come down in the shape of a curve. Yes or no? Are you getting it? You'll be like a curve. You come down like this. Yeah. But you can pour water like almost coming down vertically. If that is the case, what will happen? If the water hit the ground, Suppose it's concrete, the water will bounce up. Yes or no? This was happening. So that's why sometimes we see this kind of thing. See how the price dropped down here? This is a nice example here. In fact, I need to note it down. This is a nice example of, I will remember to put it down when I'm recording that video. You have a triangle, and now the price ran out fast, very fast. Now it hit the ground, it will bounce up again fast. But usually, the momentum also, talking about the increase in momentum in the last segment of a price action, take it from me, when we have, this is it, a triangle, that's what I say to you, the triangle is a very beautiful pattern. A, B, C, D, E, Elliott wave pattern. Go to www.24 Elliott wave. Sit down with your favorite drink. Don't let anyone disturb you. Spend days and hours reading everything and watching every video about A, B, C, D, E, pattern. So when a triangle is formed, especially in the fourth wave, during the mochi wave, but again, there are principles. So, but if you want to understand the principle, I can explain to you more, because suppose we have a pattern like this, all right? I'm going to create a funny pattern. Are you still watching? Okay, if you are still watching, thank you. It means that you are passionate about Elliott wave. All right. Suppose I'm going to create a pattern. All right? Call it George pattern, okay? Call it George pattern, okay? So this is George pattern. Price goes out from a low, went up a little bit above this high, and then from another higher low. Okay? Right there. The pattern, are you with me? Okay, good. Suppose we have a pattern like this that we all know, or we keep it a secret, or we are the only people who know this pattern. All right? So the pattern start forming. A lot of maybe some experts may know that this is the pattern that is likely to be formed. So those experts will be prepared to trade it as the pattern is being formed. So they will decide to buy here. And the price goes up to that point, a little bit above this high. And then those experts will sell it again as it's coming near this low. They will quickly come out. And then those experts that are expecting or predicted that pattern will buy again here. And as the price coming near here, this level, they will come out again, okay? Now, the pattern has how many segments? That's a 5 segment. 1, 2, 3, 4, 5. So which one is the last segment? This one. So what I'm discussing with you, hold on please, let's go back to, because I want to buy again the Dow Jones though. Those are nasty, greedy, bear with me please. All right, hold on please. I want to, are you still watching, or is it too long for you now? I said to you, these videos are not a short form, they are long form. So we're going to hang around a bit. You remember this Google hang around? Yes. Those are passionate Elliott wave traders hanging around today. So if you are tired, okay, we'll see you next time. So we pull back nicely. This is what we were expecting here. And now they create that mess there. They need to calm down more if they want me. So in this scenario like this, what I will expect them to do now, okay, that's my own expectation, is to do something like to bring it back here where they mess it up and to form a double bottom. That's what I want them to do. And if they do that, I will buy again, provided that this common sense trend line here, bringing the price down, is broken, then I'll buy again. Otherwise, I'm not going to play around here. Looking at the time of the day, it's now 54 minutes past 6 p.m. We are in a gap period. This is not the best time for day trading or scalping. I'm aware of it, but I can handle it. All right. So where were we? So let's go back to where were we? We were talking about a pattern with time frame. I forgot now. Yeah, this is our pattern. So this is the last leg of our pattern, yes or no? So what I was discussing with you about the triangle, so we were talking about the fourth Elliott wave, yes or no? That when we see a triangle in the fourth Elliott wave, we can predict that the fifth wave can be racy, can be fast. Why? First, because it's the last segment of the motive wave that is formed of 5 waves. So last leg, likely to have strong momentum, may run fast because everybody sees it now that the motorway is about to be completed and the crowd, this is it, the crowd will come in and finish the pattern, okay? Now, apart from that reason, that is the last segment, if the fourth wave is a triangle, most importantly, if the triangle took so long to be formed, if we say it's too long, we are on a 3-minute time frame. That's a long time in 3-minute time frame. You see here, from it started. Okay, that was yesterday. Since yesterday around 11 o'clock. Okay, until 3 p.m. Eastern time. That's a long time on a 3-minute time frame. So this on a 3-minute time frame, that's a long time. If the triangle took so long to be formed, we can say that the fifth wave can be quite racy. The momentum may increase very fast. All right. That's what we can predict. But if you are a smarter, if you understand what I mean by smart, I mean that if you are a trader that understand the market principle, the message is not about the fourth wave itself. The message has something to do with the last segment and the segment before the last. So if you have any pattern, this is it. If you have any pattern that you know, and during the segment before the last segment, you see a triangle, you can predict that the last segment will be very racy, can be fast, 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 if the segment before the last one is also a triangle. So generally, the last segment of a pattern is usually very fast. We know that already. But if the segment before the last one is also a triangle, and that triangle also takes a bit of time to be formed, we can forecast that there is a high chance that the last segment will be racy. Now, some trader will say to me, Joe, thank you so much. It's very clear, understand it. But don't get carried away because it doesn't mean because the fourth segment or the segment before the last segment has been formed, therefore definitely the pattern will be completed. No. So what do I mean? So you see this pattern, you say you know it, that's George pattern. So in reality, you see the fourth one, and it is a triangle. And you go and empty your bank account and buy here and say that definitely we're going to have the last one that can be segment, that can complete the pattern. But no, the price does not have to fulfill that. It may just go like this. And you say, which pattern is that? I thought this is a George pattern. It's no more George pattern. What's going on? What's going on is that you get carried away. That's all I'm saying to you. All I'm saying to you, which is, again, we can talk about it and call it a market principle, is that a pattern that starts, okay, that doesn't mean that the pattern will definitely be completed. So you see that you say 1, 2, 3, 4, that's George pattern. Now we're going to definitely going to count this one, and the price calm down. So the best scenario will be, okay, like George always say, priority to bullish signal above and priority to bearish signal below. So if it did below, you say, oops, can go down. This thing can go down. Okay, that's what we are saying. So this is about the triangle and the large segment, talking about the increase in the momentum and the racy, R-A-C-Y, racy, okay, price action. Now we see, and sometimes this is known as a gap like this. But this is not what we were expecting today. As I told today, we were expecting another pullback into this zone. And then we can buy, but it just got through it and continue to go down today. This is again a change. So our expectation was that we counted yesterday 1, 2, 3, 4, 5. We were talking about a flat correction, and we were expecting a C minor wave or that flat correction to bring the price somewhere here in an orderly fashion. So today we can resume buying the Dow Jones. But here again, look, it has changed again. Now we start a new speculative wave count today. And we're talking about first wave, second wave, third wave, fourth wave, fifth wave, and we are talking about a flat correction again. Another speculative Elliott wave count. But as I show you on the 4-hour time frame, it's now a consolidation play, and we can, if you go down, you see it's down below that consolidation. So project it down, as I told you, project those line down, the width of the triangle, the channel, project it down, and look for a trading setup on or near the edge of the channel. So the last thing I want to mention to you, so I'll go back to my George pattern. See, so if the last leg, this is something I will discuss with either way trader because it's powerful stuff that you need to know. If the last leg that pop out of a triangle, this is very important, the triangle should be there. If the last leg of a pattern, last segment of a pattern is very racy, right? And it reaches the target level, again, the same phenomenon usually will happen here. As is, you remember the story about the water pouring down in a vertical fashion? You hit the ground, you bounce up. So when the last segment is completed like this and hit the ground and hit the target, you're likely to see again a bounce down a bit, which will be another racy. So call it action, reaction. If the price action that hit the ground, okay, if it's the last segment and hit the ground like that, boom, all right, you may see another bounce up. Again, this is what we are saying to traders. Those of you that have been following us know this, all right? We said it, you said it, isn't it? We said it, isn't it? We said it. So you say something, it makes sense, but people forget to turn it upside down. This is crucial. You have to train your mind to play both ways. Usually people forget. So you say something, you say, yeah, it makes sense. Yes, it makes sense. Now turn it upside down. You see the pattern that I have here? This is the opposite. We turn it upside down. All right? So it does not mean, so I say to you that if you bow the last leg, hit the ground, pull like this, very often, the reaction will also be a racy price action. But we turn it upside down, it's not always the case. This is it. This is one thing, maybe should we talk about it and say, in the financial market, there's nothing like a certainty that this is the case all the time. It may, so we may say 60% of the time, you may see that reaction. But there is another market principle that we talked about before, that high volatility is often followed by low volatility. So, and then you wonder, you say, oh, there is a conflict. There's no conflict. It's just because things do not stay the same way in the financial market. All right, I think I've said enough about that, okay? So some traders start getting tired of it because they already understood it. They say, George, you're wasting my time. Move on, please. And I don't want to annoy those traders. So this is it about a scalping trade on the 3-minute time frame and 1-minute time frame. We started from the 1-minute time frame, and now we are back on the 3-minute time frame. My favorite lower time frame is 3-minute time frame. And what is happening here, you see here, now it's coming down, okay? The Dow Jones is coming down. So people play now, so they have a first wave, second wave, third wave, fourth wave, fifth wave, minor wave, the first minor wave of the flat correction, second minor wave of the flat correction, C minor wave of the flat correction. So traders say, oh, George, this is now, the correction is completed. They say that's the C minor wave is finished now. It's a flat correction finished. So if we continue with the discussion, we put it there. So people say, so a lot of traders, when they read this point, they get confused. And I say, why are you confused? You shouldn't be confused at all, because you should flow with it. So what do you need to do at this junction? You are doing speculative area weight count. You will call this point 1 again. Again, we call this one 1. Okay. So 1, 2, 3, 4, 5 speculative way becomes 1. Right? So this one flat correction becomes 1, 2. So, and then you start flowing again, all right? You're going to the higher degree. All right? Otherwise, you're going to get confused. And you don't want to get confused, do you? All right? You don't. Because you are an Elliott trader, and you should understand the higher degree will come. So some traders, they go to 24elliott.com, they learn about how to count wave, area wake-up guidelines, and they never check the page of the higher degree area wake-up. How can you mature as an area way trader if you can't connect the lower degree to the higher degree? And you get lost, you can't wave, and then you dump it, you don't know where you are, even if you are doing speculative area wake-up. So now like this, we go 1, 2, 3, 4, 5, flat correction, now 2. So now this is it. So we will say 3. We are now in the third wave, speculative. Huh? Don't bang the table, don't smash your computer, speculative. Well, these are not fully fledged area wave analysis. Speculative, using the area wave to make a scalping trading decision on the lower time frame with the market noise. So now we say second wave. All right. So what is the rule that we should apply now? So, all right. So this from here all the way down here, what do? You will apply Fibonacci extension to that first wave of a higher degree. This one. From here all the way here, you apply Fibonacci extension to that, and you will highlight which level? The 161.8% Fibonacci extension of that move down. 161.8% is area wave rule relating to the third wave. So the third wave, normal third wave in this case, should at least reach the 161.8% Fibonacci extension level of this supposed to be first wave of a higher degree, talking about speculative area wake up. All right, that will be a level that people will watch. Okay, we'll be watching, expecting it to go beyond that level of 161.8% Fibonacci extension level. But because we are talking about speculative area wake up, when you are doing that, in your mind, you know that, okay, this is not a proper area wave analysis, but you are just using it. So you know what you are doing, all right? It's like you are playing with your child, playing football. You're not going to kick your child like you are playing real football in the street. If you tackle your own child, you're going to break the bone of your child, yes or no? So this is what we are doing here. So you are using the area wave for a purpose, for speculative purpose. That's what I'm saying to you. So you can do that. Another thing that you can do at this junction like this, because you want to speculative trade, you want to make a decision as a scalper using the area wave principle. So one more thing that you can do here, you see, so price went up. What was you see, this is the last move down here, this move down. What do we do with that? Remember the fifth wave. You go again, you can apply Fibonacci extension for this move down. This is the last move of all this blah, 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 blah. Apply Fibonacci extension to that. And what do you need to do? You highlight the 138.2% Fibonacci extension level on this move down. Why? That's a very good question. The reason is, if we break below this level, the next challenge for the bearish traders is the 138.2% Fibonacci extension of that last leg here. Okay, and then you're just looking for scalping your trading opportunity in different places. Okay, that's it. These people mess up everything now, so I'm not going to waste my time playing with them, looking even at the time of the day. It's now 7:08. I'll call it, end of this tutorial, okay? So I've been talking to you now for how long? Only 1 hour, 8 minutes. Oh, I thought it was 2 hours. I know what you are thinking. You see, Joe, that's too long. Okay. This is a long-form tutorial, okay? Long-form tutorial, okay? So sometime I will be live day trading using the area wave. I may take 2 or 3 trades, or even 4 trades, going to trade in different financial instruments throughout the session, and that video can be 2 hours, 3 hours. So I'm giving you a warning that I will be recording some video that will be very long. Now, those videos, I'm not saying that this is going to be the format that we're going to follow all the time. Of course, we will be recording video of 10 minutes, 15 minutes, 17 minutes. As you see recently, I cut it down almost to 15, almost many videos. But on average, before, my video were 20 minutes or up to 30 minutes. But as I'm speaking to you today, Well, you will be noticing that, as I promised traders at the beginning of this year, that I will be using the Elliott wave in real time and play with it so trader can see how you can live day trade using the Elliott wave principle. So those type of video that we will be recording about live day trading using the Elliott wave principle on a speculative time frame or the lower time frames. Okay, those video will be long form videos, can be more than 1 hour, 2 hours, 3 hours. Should we say 10 hours? No, we're not going to do 10 hours. All right, 3 hours. The market is not open for 10 hours, of course. Okay, so can go even to 3 hours. I can come. Okay, New York is open, and then just trade it, use the area wave until we get bored or until the market is closed. So now, traders who want to watch those videos, there are traders who watch those videos, they watch them in full. Some traders may have to watch it bit by bit. So you come, you watch it, and then you get tired of it. Okay, you just look at it and say, okay, I stop at 45. Next time you come back, you pick it from there, and then that's how you're going to watch it in full. All right. Now, this is it. Now, just understand that some video will be very short and those live trading will be long. What I will be doing with the live videos like this, as trader will notice already, is that I will premiere those videos, which means I will use the function of the premiere. It will show like a live trading, really live trading, and I'll premiere them. And those who won't have time can watch it. If you do not have time, you don't have to watch it. You will receive the notification, of course. So the notification is just to inform you that this video is recorded. Are you interested to watch it and you watch it, or you have enough time to watch it? You may decide to watch it another time, or you may decide to watch it only part of it and then come back to it. All right. Sometimes traders start watching videos. All right. So a trader may come like this and watch the video and say, "Oh, I'm not interested in this." Blah blah blah. But that trader may decide to watch maybe 20 minutes of that video. Suppose like yesterday, you skip through the video that I was showing you, blah, 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 and then you say, well, George said that we need to be aware of the nuts, the neckline, and then you remember that. So today you see the price going down, you go back and say, okay, now I'll go and watch the video and listen more to what he said in that session. So you scroll the video down to that session and you listen to it, and then you pick what you want to pick, and then you go away. That's it. All right. So I'm a YouTuber. In fact, I am a number one YouTuber. So I know what's going on YouTube. When people are tired, they are looking for short form video. They go into entertainment mode. They want short videos. But sometimes people have time, they go into steady mode, which means they want to learn something and they are prepared to just consume it. So this video, long form video, in fact, for people who are trying to master, okay, live day trading using the Elliott principle, those people will sit down and watch the video in full and they will be saying, well, I disagree with him here, or I like what he said here, or I like how he did that, or I couldn't believe that stupid Joe did that there. Oh, I will never do that. I'm glad that I know that, and so on and so on. And then this is it, okay? So I want you to understand, okay, what we are doing now, okay? So has been a long video, yes or no? 1 hour, 30 minutes? Okay, good. If you have any question or suggestion, feel free to put in the comment section. And of course, I will be recording another video to answer your specific question. All right. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share it on the social media. And I say to those traders that are sharing our video, thank you very much, okay? Subscribe to our YouTube channel. Our YouTube channel is for Elliott Wave Trading is 24 Elliott Waves in plural. So click on the notification bell. So anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about live day trading on a 3-minute time frame using the Elliott wave principle in a speculative fashion. Happy trading to you all, and I will speak to you soon. Thank you.